West Austin Properties, and this is Ben Norton with Southwest Bank, and today we're going to talk about typical closing costs for a home purchase. Ben, talk to us a little bit about what the typical closing cost would be for a home purchase on the buyer side.
Okay, Laura. Primarily the first closing cost that you can expect is an appraisal. An appraisal can range from $350 to $450.
And who orders that appraisal? Does the lender order it?
The lender orders the appraisal, and the appraisal is typically not ordered until after the option period, or at least after the inspection.
I see. Okay, good.
In addition to the appraisal, you can also expect a fee for processing and underwriting. Those fees range from lender to lender. Those fees together can call it $700 to $800.
Okay, and that processing would cover your staff here to get all the verifications together and to send all that information out.
That's exactly right, Laura. Processing is doing verifications, putting the file together, and underwriting is, there is a specific underwriter that will give her stamp of approval or decline for that loan.
I see. What about loan origination fees?
Good question as well. There's a difference between a loan origination and a loan discount point. The way that I look at it is a loan discount point, it can be 1 point, it can be a fraction of a point, half a point, 3/4, etc. What that is you are buying the interest rate down. It is very simply prepaid interest and can be tax deductible. If you pay a point and buy the interest rate down, it will clearly mean a savings in payment versus if you didn't pay a point, because the rate would be higher.
So you might pay a little bit more in a discount point to bring that rate down.
That's right.
And a seller could actually pay that discount point to bring the rate down for the buyer.
That's correct, and that's a great way to utilize a seller credit, is to buy the rate down.
Now, what other closing costs might a buyer expect?
There are title fees. There are attorney fees to prepare documents, transferring title from the seller to the buyer. A big title fee or a big non-lender fee is the survey. The survey is the bird's eye view of the property, boundary lines, property setback lines, etc. And that is usually $400, depending on the property. I've seen more expensive surveys than $400.
Right, and those title fees that you were talking about, they generally run between $200 and $300. And recording fees, probably another $30 to $40 to record.
That's about right. Some of it depends on the loan, the deed of trust. Is it an ARM? Is it a fixed rate, etc. So the recording fee can vary.
Yeah, how many lines you have to record down at the courthouse, that type of thing.
That's correct.
And then attorney fees, maybe another $100, whatever the cost is to prepare the note and deed of trust.
That's correct. And they're a little bit more than $100, but there are, call it $1,000 in title fees or fees other than lender fees.
Now, how will the buyer know exactly what the fees are that they're going to be paying on this loan? From right up front, do they get that information?
They do, and once a property has been identified, within 3 days of loan application, there's a federal law that mandates a lender send a good faith estimate to the buyer. That will outline each specific fee and what they are. In addition to that, those fees cannot vary by more than 10% from initial disclosure to closing.
So it's a really safe bet that the estimate that you give them is going to be good and they can count on it.
That's correct. Let me mention one other thing, additional fees other than lender and title fees. Insurance. A year of insurance up front is due. No ifs, ands, or buts. Whether you take care of your taxes and insurance in your mortgage or to take care of taxes and insurance outside of your mortgage. So in addition to lender and title fees, a year of insurance is due, and there can be prepaid taxes and insurance if you're going to have an escrow account.
Right, so an escrow account is just where all those fees are held by the lender so that when they're due, they're payable. Thanks so much, Ben. Great job.
Thank you, Laura.